Okay, people hate when I walk up to the mic. And some people like it, some people hate it, but I'm going to do it anyway. Welcome. It's Options Thursday, Invest Answers Options Thursday. And today we're talking about put options. Put options are my favorite tool to go shopping, and I'll explain why. And also towards the end of the video, we're going to review a lot of the Patreon Capitalist trades that were live and done. And I'm going to review every one of them. So some fun times ahead. But let's take it from the very beginning. A lot of you are still challenged wrapping your heads around what options are. Buying, selling them, calls, puts, leaps, all that type of stuff. So I'm going to start real simple and we're going to walk right through. So first of all, in math we trust. Second of all, this is edutainment. That's a new word I learned today. Education and entertainment bundled into one. Please don't take any of this as trading advice. So this is put options, options 102. And when you talk put options, think insurance. And that'll really help everything, sink in. So first of all, let's jump in. To buy a put option. So we've got to go through the definition first. And I know it's very tedious, but the fun stuff will happen in the next slide. It is an insurance policy you can buy that gives the holder the right to put blocks of 100 shares. Every option contract is made up of 100 shares at a set price, which is called a strike, before a certain expiration date. Okay? And if the put option is exercised, the seller or the writer of the put has to buy the shares at the strike price. So I know to many of you that sounds like double Dutch, but I'm going to simplify it with a very simple example that you could all relate to. So imagine John and Mary. John has a house. He thinks the market's going to crash. The house is worth $500,000 today. He thinks the market's going to tank below $400,000, but he wants to make sure he locks in his value of his house, $500,000, in 6 months' time. So think October, November. He anticipates a big market crash, but he wants to lock in that price today. Now, Mary wants to buy his house. She's not ready to buy it today, and she thinks the market's going to go higher as people choose real estate as a hedge against inflation. But she wants to make some dollars by taking in some risks. So as far as Mary's concerned, there's no downside to this particular transaction. But let's walk through exactly what they do together. So basically, like as I said, it's a $500,000 house. John pays $100,000 for a put option. This is the option to put the house to Mary, who is writing the actual put at $500,000 in 6 months' time, i.e. until expiration. So John is the holder of the put. He pays insurance. Think of it as homeowner's insurance, so that the price of his house won't go below $500,000. He's giving Mary, the writer of the put, she collects the $100,000 insurance. So I hope that's all clear. Now, let's look inside their heads, because when we talk about options and trading, you always have to put yourself in the other person's position to understand exactly what their incentives are. So from John's point of view of the put option, again, he thinks the market is going to tank. He thinks his house will be worth under $400,000 in 6 months. And he's going to make basically Mary pay him $500,000 for the house. And for that, he's going to pay Mary $100,000. And he thinks that's a very good deal. He thinks it's a very small price to pay for that peace of mind. Now let's see what's going on in Mary's head. So Mary's view is, she thinks it's a killer deal. She's getting $100,000. So basically she's getting $100,000 off a $500,000 house. And no matter what happens, if the price of the house goes up, she just collects the premium. If the price stays flat, she collects $100,000, the premium. And she only loses money if the house goes below $400,000. But even at that, she wants the house anyway. So for her, it's a win-win-win deal. So think about that. You got a buyer of the put, John, and you have the seller of the put, Mary. Let's analyze what happens. So here we are. These are all the different scenarios of who wins. And it's the easiest way to put it. And I'll share this spreadsheet with you all later as well. And it's a real live option spreadsheet. So the house, say the open date of the actual put option and the expiration date of the put option, And the strike price is $500,000, the price today. The premium is $100,000, that is always the same. Now, the ending price is the price in September 21st, 2021. Now, will it be $600,000, $500,000, $450,000, $400,000, or $350,000? These are all the scenarios. So it's very important we see exactly who wins and who loses. So if the house goes to 600 grand, you'll see that Mary wins 100,000. She collects the premium. That's untouched. John effectively pays the premium, even though the house has gone up in value by 100 grand. He's still out of pocket by 100,000. So technically, he's at break even. Then the second scenario, the house stays flat at 500,000. Again, that 500,000, consider that a stock price. Consider it like Tesla being $500 6 months from now, or anything else. So that's the easiest way to wrap your heads around it. The price is at 500,000. Mary still collects the 100,000, so she still wins. John keeps his house. He doesn't put the house to her because it's not below the strike of 500,000. Third scenario, price goes to 450K. Here, Mary is still up $50,000. So she still wins. She won the first scenario, the second scenario, and the third scenario. But she gets put the house. So John gives her the house. She has to pay $500,000 for the house. But net, she's only paying 50 because she got 100 from him already. Okay? Fourth scenario, the house goes to $400,000. Here, they're both at zero. Nobody wins. Mary gets put the house and is at break-even point. John is also at break-even point. It's very important because he technically gets to sell the house for $500,000, even though it's only worth $400,000. And the final scenario, the house tanks. This is John's thesis. This is what he thought would actually happen to the housing market. Price goes down to $350,000. Here, John makes $50,000. He puts the house to Mary at $500,000, and Mary is down $50,000. She has to pay $500,000 for an asset that's only worth $350,000. There she loses. But remember, she won the first three scenarios, broke even on the fourth, and only lost on the fifth. So I hope that helps everybody understand. So the story so far is for every buyer, there is a seller, and each one has different motivations and expectations. So I really want you all to understand, you're not just buying from a market with no name. There's somebody on the other side of the trade. And also very important to remember, it's a zero-sum game. So for every winner, there's a loser. If one investor loses, then the wealth is transferred to the winner. So always think about that as we go forward as well. So here we're going to look at some Invest Answers community option trades, real life trades done by Patreon Capitalist members. And my favorite way to learn, as you all know, is using concrete examples so we can look at exact trades that people have done and where they were good, bad, or indifferent. So it was over 100 submissions. I reviewed them all. These are just the put trades, and it's also important to emphasize that one of the techniques I like to do is sell puts to fund my call buying. And a lot of you are learning that trick and doing it really well, but I'm just looking at the put leg of it. Now, from all of over 100 trades, nobody actually bought any puts, which is marvelous. Remember, a little secret, the money's in the selling, not the buying. Like everything else, like when you get involved in a trade, you don't actually realize any profit till you exit it, till you sell it. And it's the most important part, and you've all heard me harp on. But let's look at some of the trades and some of the cool names that people have. We've got James, we've got Jeremy, we've got Ken, and we've got S-Scale. They sold put options on things like Palantir, MicroStrategy, Blink, Riot Blockchain, and Invite. And they were all fantastic. Now, as usual, I'm going to go through this. This is the Patreon Capitalist Option spreadsheet where you can share and plug in your own numbers and vet your own trades. But let's just jump right in as usual and look at the Palantir trade by James B. So, end of Feb, early March, he sold a put on Palantir. The strike price is $22. The premium is $6. Therefore, you guys can all calculate in your head, his break even is $16. The current stock price is just shy of $24. So this trade is already profitable. And there's nothing bad with it at all. There's no bad, there's no ugly. In fact, what he has is the strike is out of the money, very important, and he got a great premium. Let's look at the chart here. Remember, his break even is 16 and the price is currently 24. He only has to worry if the price starts going near 16. And you can see, according to the chart, we are very far away from the $16 break even point. So all around for Mr. James B, great trade. Very proud of your work and keep it up. If Palantir tanks again, it's a great way to sell an actual put option, because then even if it's great name stock and it does get put to you, you buy it at a huge discount. Just think of Mary and the house. She took in 100 grand and got a house, even though one of the scenarios was the price tanked to $350,000 from 500. That's the only scenario in which she loses, but otherwise you win. So it's a win-win for everybody. Second trade, MicroStrategy. This is a put sell by Jeremy. He sold the 550 strike puts. The premium he got was $142. It's huge. His break-even is $408. Unless literally Bitcoin severely tanks, I don't see MicroStrategy going to $408. And this trade is already in the money. So great out of the money strike, really good premium, well done there. The bad, just a point to highlight, and this calculates kind of your put cash reserve and your margin required for such a trade, depending on where you are and what brokerage account you have and how much reputation you have with them. The amount you need to put up to sell a put varies, and that's calculated. But please check with your brokerage, because it does vary from company to company about how much they make you put down to be able to sell a put. The other thing to remember as well, the further the put goes out of the money, the less risk you have and the less margin is required. So that'll also happen as well. I sold puts on MicroStrategy for, I think, $290 for over $100. And right now it's so far out of the money, the margin I used to hold that position is basically nothing, which is wonderful. Let's look at the chart real quick. We're all very familiar with the MicroStrategy chart. As we know, let's refer back to the break-even point, make sure I remember it correctly. Its break-even is $408. And that's right about here. We haven't been there since the very beginning of January. And currently, even though it got, today I think MicroStrategy went north of 800, about 810, 820, and then it tanked back down again to 733. So a very volatile day. But again, this is an option that is good and should be very safe. Again, barring any unforeseen situations. Blink, this is an EV charging company from Ken. Again, he sold the puts with the $30 strike for nearly $12. It's a huge, huge premium. It's massive. The current stock price is $36. His break even is 18. So his stock could tank by 50% before he even has to worry. And let's look at the chart real quick. Again, break-even point is 18. We're far, far above that. So that's another excellent trade. So congratulations, Ken, on that one. Let's look at Riot Blockchain. Another one from Ken. Ken's crushing it right now with his put selling. He sold Riot, $50 strike, and this stock has been on fire. The premium's $27. Like, I'm going to zoom out for a second. Who would pay $27 premium for this type of insurance? Is so expensive. So when things are really expensive and the underlying asset's very volatile, that's when you sell. So really good job there, Ken. And you can see here the margin required to guarantee this is not that much. And everything looks great. Now let's look at the chart real quick. Again, break-even point 23. Riot, even after a rough day like today, is still above $60. So not a problem. Well done, Ken. Invite, see what we have here. SGL, this is one that I'm very bullish on. He sold the puts, strike price is $40. Premium $16. But look at the expiration date. This goes all the way out to 2023. So it's the first tiny little nitpick flaw I found on somebody's trade. And it's not really bad, but I just want to remind you all, when you're selling puts, I like to sell them for shorter time frames, like about a year. I don't mind buying leaps, like call options, for 2 years, but selling puts, it's rough to hold up all that margin and collateral. Unless it goes, of course, it goes very far out of the money. That's the only slight little nitpick I have in this. But look at the premium. $16 in premium, $40 strike. His break even is 24. As usual, let's look at the chart. Now, as you've heard me before in many other videos, I see Invitae at $58 by June, barring any unforeseen circumstances in the stock market. Currently, it's 43. I made a trade I entered in at about 38.5 a few weeks ago on Patreon, so it's still looking really good. And his break even is so low, he will be in perfect shape. So in conclusion, everybody, as usual, always wait for the conclusion. A couple of things. Insurance is expensive, so buying puts is expensive, but selling puts is very lucrative if you can do it right. Sell them when times are volatile, when things get beaten down and big spike downwards, then you get great premiums, and that's what the team did here on Patreon. So huge congratulations, very proud of everybody. Try sell out of the money, try buy in the money. Remember that as well. And it's best to sell out of the money when volatility is high. Ultimately, on names that you want to own. Always go back to Mary in the house. She wants to own the house anyway. So if you feel comfortable, like Palantir, a lot of people looking to own Palantir too. So Shopify, like for a long time, I have calls on Shopify, but I wanted to own more. So I kept on selling puts on Shopify all last year, every quarter. And the stock kept on going up and I kept on pocketing all the premium. It was wonderful. But the reason I sold the puts was the calls are so expensive. I just didn't do it. Anyway, I just want to say thank you to everybody. And again, before you ever do this, make sure you have the margin, make sure you have the authority, and make sure you practice paper trade, and win 9 times out of 10 before you play with real money. Very important. Big thank you as well, as usual, to the IA community on Patreon. Love working with you every day. And if you want more, hit the like, subscribe. This is every Thursday option series, and I'm going to go deeper and deeper to all the cool, sophisticated strategies that I like to use as well. Okay, watch for the scammers. They're everywhere. Thank you all. Bye. Happy Thursday.